Hello and welcome to the Pipnotic Symposium for the 15th of February 2018. Today we're going to continue running through these trades that we put on. And in the meantime, we're putting on a ton of trades where we're not really interested in if they're winners or losers. We just want a sample size. We're spotting areas that look interesting, and we are going to look at all of the trades every week. We're going to find the ones that won and the ones that lost. And when you've got a 100 or 200 trades, we're going to have a really nice basis of information that we can use to qualify the good trades in relation, rather in contrast to the losing trades. And so this is good because it's going to enable us to create a protocol that we can use in order for qualifying really good supply and demand trades. And so, I mean, the basic Pipnotic supply and demand strategy is pretty much built up around this stuff. But I feel that it's important that we kind of do everything from scratch, because of course you can have a conceptual understanding of something, but unless you're implementing the theories that make up the concept, then you're not really learning anything. And so the whole reason that we're putting on a ton of trades all the time is that we will be able to interact with the market and establish a really nice sample size of trades. Then we can go through them individually and see why certain trades won, why certain trades lost. And some of the winners are going to be bad trades and some of the losers are going to be good trades. And ultimately we don't want bad trades to win. Good trades that lose, that's fine, that's always going to happen, but we want bad trades to lose, because ultimately if you're putting on bad trades and they're winning, then we're going to create some bad behaviors which we don't want. So we're going to, fingers crossed, hope that all bad trades, or the vast majority of them, are going to lose. Okay, so let's continue off from where we left. We're going to start with this Aussie CAD trade here. This was a sell, and you can see the sell here. And I mean, if you consider for a moment this whole structure here, if we draw this nicely on the chart, and we have something that looks like this. It goes down, up. We're going to draw just the big ones, the major ones. I don't know what's going over there. And so at the time that we decided to put on this trade, which was just around here, this is when we have filled, you have to look at the current area or the current leg that this price structure is hanging on. And it starts here. I mean, here we have the 10 area, and here we have the 0 area here, just here. And so the higher price has to go, the higher the probability that the trade is going to work for this particular price structure here. So what you want to do when price moves down like so, you want to always notice for selling, the highest level that price has retraced to prior to moving lower. And you can see that it actually went back to this price level here on its way down, because this is the cheapest price that you want to sell at. Okay, so looking at this, I mean, you see that price went down, we had a nice pullback, price moved away, and now price had another push. So would it make sense for us to sell here knowing that price has already pulled back to this level? It doesn't make any sense at all. This is also maybe a 1, this is maybe a 2, which is not very good. 3, 4, 5, 6, 7, 8, 9, 10. And so, I mean, we want to be up here for the trades that we can expect to move and then get a really big push away. So trading at the lower end of the curve is a really bad idea, because you're going to hopefully burn your fingers each time. Okay, so I mean, price came back to this level here. Let me remove this. And so this pullback here is pretty much showing us where we have some supply, and you can see it here. It's a bit messy, but I mean, price pulled back to that level. Okay, so this is supply, this is not supply, this is not supply, this is a reaction to supply. So this is a child and this is a parent. You don't want to trade childs because they are lower probability. What we have had here, you can see how we had a series of lower lows here and lower highs, which is great. Then price pulled back to this. I mean, it doesn't make any sense at all selling here. Why? Well, you can actually see that we have micro supply in here. You can see that price pull back, so we're just going to mark that off like so. We'll take the high of this accumulation candle and the high of this pullback here. You can see that price came down, we accumulated. Let's go to the bottom of the accumulation candle, and price left, tested it, tested it, tested it, and then tore through it the next time. So this is super low probability because it's been tested numerous times. Also, price has already been back to this level historically, so wouldn't it make much more sense selling at price level, at least the highs of this most recent pullback? Yes, it would. And had we have done that, we would have had an absolutely tremendous trade out of that. So always pay attention to this. And if you want, you can, you can put an indicator like the zigzag indicator on there, and this default configuration. This is going to help you focus on these swings a little bit more. Ideally, you want these big swings. This is too choppy. I'm going to maybe make something that finds the really nice swings, but you can see that, I mean, this is kind of showing us where the swings are. And if you want, you can go here and have a closer look at it, and you can see that we have a low, high, low, high. We had kind of a little zigzag there. Price came down, and we had a pullback, and we left. That tells us that, I mean, price moved up to this pool of liquidity, and we found some selling, some sellers up here, some limit orders, and this drove price lower. So take this information with you down to the smaller time frame. Yes, to the smaller time frame. So, I mean, I know this is these discussions, these videos are targeting kind of shorter term intraday trading. Keep in mind that it's always a good idea to know what's going on these bigger time frames. And so looking at this, it makes absolutely no sense at all selling here. This is where you want to sell. Price went down, we pull back. This is pointing to where the beginning of this area of supply starts. So that's where you want to target for a sell, just here. And you wouldn't want to touch it on the following tests. I mean, despite the fact that price did go up into it and we had a really nice, maybe a 2-to-1, it's lower probability each time price pokes into an area like that. Okay, let me remove this one here. We're going to go to, actually we're going to see if we can look at the higher time frames and see if this makes sense for us. So if we go here to the 4-hour chart, you can see that then we have this weekly candle here. So price went up, we accumulated, we had 1 week of accumulation, and then price left, and we closed below this candle here. So there's a lot of selling here, and you can see we had 2 really strong days of bearish selling. Halfway through this area, halfway through this weekly candle, price came down, we accumulated for 2 days, and then we shot off here. So price is testing kind of the close of this day, the open of this day, kind of the lower edge of that period of accumulation. Okay, good. So that was that's that one. Let's have a look at this was news. I remember I don't like trading around the news on the small time frames, so I realized there was news. I just closed the trade. Price went up here, it poked up into here, and then it went down. But notice, I mean, where are the rectangles here? You can see the rectangles are below price, so clearly price is going to be moving higher. And so selling here is not such a good idea. Why? Well, we have this here. You can see that we had this price level here that has not been compromised, and so we were kind of trading between these 2 areas here for a while. Price popped above, and we're kind of moving sideways. So this was a relatively low probability trade, simply because we are going against the major trend, and also well we had the news going on there, and this intraday stuff can be quite difficult to get right when there's big news. That said, if we look at this one here, I mean, look where price went to when this news went on. Price came back to this area of supply, went all the way through this, tore through this, found liquidity here, and this is where we saw the reaction. So if you're getting your areas right, if you're able to find them, the good ones, then you can, in some cases, leave your orders in the market. But liquidity has had a tendency to dry up during volatile periods. This is because, or price becomes volatile because liquidity tends to dry up around big news releases. So just keep this in mind. Okay, here we had another one. Price went up, we came down, found this little nested 1 hour area within the 4 hour area. This is where we saw a reaction. So price can sometimes do that. Let's have a look at this one. This is the dollar South African rand. And we bought here. And I mean, looking at this, first of all, we haven't been able to close above this high, trade above and beyond this high. You can see that price is drifting high. We can actually maybe do something like this. Something like that. Price did go above there, so we might look something like that. But again, if you go to the bigger time frames, you can see that, I mean, where are the rectangles? Are they above or they're below price? Well, they're above price, so telling us that we should be selling this and only selling this. Look at the swaps here. It's also telling us that the major flows are short the American dollar, Japanese yen, at least for the time being. Fundamentally, that doesn't really make sense because the South African rand has been taking an enormous hit, and so you would expect this pair to be moving higher, but price isn't doing that, and so you've got to keep that in mind. Keep also in mind that we're reacting at this weekly area of demand, which is nested, has a nested daily area in it. You can see actually very nicely that price is coming down to this parent. It's been tested a couple of times, and so now price is kind of poking into this weekly area of demand. So we might be able to find some support here and drift higher from there, and eventually bring price up to here where we can continue to short should the short-term sentiment support this. Okay, so I mean, another thing on sentiment, I wish there was a trade I put in. This one here. Maybe it's one of these. We'll come back to that. I'll keep that point in mind. Okay, yeah, this is a really good example. You can see here that, I mean, this order was put on. We had this area of supply right there. When did I put this on? The 13th. I put it on here. Yeah, it's, I mean, one thing I'm not doing, which I want to mention, is that we're not setting our orders to expire, and this is potentially dangerous, especially intraday, because price could come down, form a nice area of supply or demand, and then move away, and unless it's coming back and feeding into these areas relatively quickly, we don't want to be in the trade. So unless it comes back within, let's say, 24 hours, then we don't want to be in the trade, because in the meantime the sentiment could change and price could begin to move in the opposite direction and potentially challenge opposing supply or demand, in this case supply. So you have to really keep this in mind, because this is super important, and we're not doing this for the time being, but by the time we get to the end of this discussion, I don't know how many videos we're going to make. We're probably going to have a 10, 15, 20 videos, I'm expecting. We will have included that as one of our parameters. It's not one of the standard parameters, because the standard Pipnotic stuff focuses primarily on the longer term. So there's plenty of time. But if you want to move this over to the intraday, the shorter term, 15-minute, half an hour, 1 hour charts, well, then you want to ensure that your orders are set to expire when they are no longer valid. And there isn't kind of a one-size-fits-all. You have to kind of look at it and see what happens. Ideally, when you have an area like this forming, you want price to come away within a couple of periods and come back in expectation that it continues lower. And if this is not happening, and price moves down, then price comes back up, well, then it's probably reached the bottom of the zone, like an area here, and it's going to move to the opposing side. We have opposing supply here. So price, if we look at this, if it got all the way down here, let's have a look, see what's going on. You can actually see that this is the lower end of this daily demand. And so if price manages to feed into here, there's going to be a potential influx of buyers into the market, which is going to push price higher, which is what we saw here. Also, again, notice this little area on this time from the daily time frame. Is there any reason that we should be selling here? There isn't really any reason at all. This is just like a tiny, almost insignificant continuation pattern. We did have a reaction. We got about maybe almost a 1-to-1, but this is not one of the high probability trades. Ideally, you have this here, price left, we tested it. This is a good example of setting the orders to expire. You have a rally, accumulation, a really nice release, and then price comes back within these 3 to 5 periods, and then it moves away. So if it's not doing that within, let's say, 5 or 10 or how many periods, then the order should expire, because next time it comes back, sometimes the sentiment could have changed and it can really challenge these areas. And so looking at this, again, we go to the higher time frame. We can see that, there's nothing in here. And so you want to be seeing these really nice areas of supply and demand on the bigger time frames, and ideally you want to focus on the nested areas, which are likely going to be on the half an hour and the 1 hour chart if you're doing the intraday. Okay, back to the hourly chart. Let's have a look at this one here. So we bought here, which is a high, which is just here. If you look at that, price did not come back. It blasted through and then it went up here, and then we started to form these lower highs. If we go to the bigger time frame, what are we reacting in? Where are the rectangles? Are they above or below price? They're above price, which means that price is probably going to continue moving lower. And so doing this is a really bad idea. So we have price goes up, it comes back down, it feeds into this little area here, and it moves back up here. And there's nothing in here. If you look at this, price has been back to here. Sorry, I'm looking to trade in the opposite direction. So price moves up here, and we feed into this daily supply. Then price comes down, and we're looking to buy at this hourly area of demand. Daily supply is more significant than hourly demand, and so trying to buy here would potentially get you into a bit of trouble, which it did, and this is a really nice example of exactly that. So please keep your eye on the bigger time frames. You find a nice area, go and see where it is located on the smaller time frames. Okay, let's have a look at this next one here. So we look to buy here. What's going on? So we saw this little area here. I'm just putting a bunch of these on just so we have a nice sample size. So you have price rally, accumulated for a while, then it shoots higher. It goes higher, it reacts at opposing supply. Then we start to see price drift down. We have a test, price moves up, we get maybe close to a 1-to-1, and then price cuts through it. We shoot up, and then we continue moving lower. Keep in mind, when price did this, went up here, keep in mind that first of all, what's price doing on the bigger time frame? On the bigger time frame, price has an area of demand down here. There's a lot of trading around here. Price rallied, accumulated, rallied, and now it's coming back. Why? We're reacting at daily supply. The rectangles are above price. Why would you buy here? Why? There's no reason at all to buy here. Okay, price, we did it. Price accumulated rather than the edge, and then it cut through it, stopped out immediately. And our price is currently sitting on this area here. But notice this, first of all, buying now would be potentially difficult unless we are reacting at something major here. So let's go to the bigger time frame and have a look. What do we have here? We've got an order in here. Let's go to the daily chart and have a look. You can see that we have a little area here, price leaves, we come back, it points to the edge of the area, and we have this one in here, and then price leaves, and it has not been back since. It came back here, poked, came almost to the area, and now we're moving. We had a really nice push away. And so, I mean, the character of price has changed once it came down into this area, as you can see here. So price is moving away, and now we're having a retracement, a potential move lower into this area here. But keep in mind that, I mean, price is moving lower, and you can see this super clearly on by looking at the triangles, sorry, the rectangles. Okay, so no reason to buy there. Also, you can see that price has already pulled back, I mean, to this level if you focus on this particular leg. And so you focus on this. This is a structure of price. What's it standing on as the origin of this move? It's here. That was a nice straight line. I'll try that again. It's right here, okay? And so buying here is not a good idea. You can see price pull back to this area here. So this would be a better area to buy at down here if this test is testing something major down here, like weekly or daily, as an example. If it's not, then you have to be a little bit careful. Okay, let's have a look at the daily chart. You can see that we are feeding into something. I mean, it's not super pretty. I mean, look at this, it's really messy. Price came down here, we left, we came back close to it, but this is not a very nice area of demand. As you can see here, we're going to leave this in because we need more trades to look at. But for the time being, I'd say you want to be selling. Okay, we're probably going to get a reaction. We almost always do at these areas. And then we want to watch price and see how it reacts. So we'll leave this in there. It's marked off at this area of demand, this small rectangle, but you can see that the flows are moving lower here. Okay, back to the hourly chart. If you have a look here, what do we have? Well, we had this one here. This is, I don't know, I got something wrong with the position size. Here you can see that, I mean, price, let me draw this in. Okay, so price, when price left here, it came back. Sorry, this leg here, it came back to here. This is the test showing us the edge of the area. The entry was to buy a little bit below at this area of demand here. Just draw that off. Price did. We had about a 1 to 2 just here, and that's fine. We don't want to test it again, because once that happens, then you have to look at the next pullback. Where has price been to? We have a pullback here. And this is where price reacted. Price pulled back here, showing us the edge of the area of liquidity. So this is the beginning of the buy zone. And once price reacts there, we can expect it to move lower. So we have this one here. These are lows. We also have a low here, which is interesting to us. And so I'm expecting price to have a little bit of a bounce within here, this little area here. Maybe it will, maybe it won't. We'll have to have a look and see. Notice that in the meantime, we have lower highs, which can be dangerous because sentiment is moving against us now. But you got a 4-hour chart, and where are the rectangles? Well, the rectangles are above price, but we also have this fresh one that's formed below price. Keep in mind that this here is just on the edge of this daily area here. It's been tested once, so this would be the second test. So ideally, to be careful, we'd want to put our entry to buy here and our stop just here. But you can also have a look at the area below, and we have price came down and we left, testing the edge of the area. So this is actually a pretty interesting area for us, just around here. We also have our stop in this area here, which is kind of showing us well, we have a bit of black space, so we have some liquidity there, so we have some protection for our stop. So that could be interesting for us should price come back down there. But I'm expecting a reaction just here at the lows, this low here, or this low here, then price retracement, and then a push lower, potentially down in here, and potentially lower. Let's have a look on the daily chart and see what's happened. Yeah, we had a really nice release to the upside. We're in this weekly area of demand. Let's have a look at it. This is a pretty nice looking area. Our price went up. This is a first test. We have a lower high, second test. So what is that telling us? That's telling us that we have a weekly downtrend. So this could be could get us into trouble. But price managed to come back down into here and move up to this high here, this low here, and then continue down to this area of demand just here. Okay, right, goody. Let's have a look at this one. This is a sell here. Was this a good idea? Why wasn't it a good idea? We draw. I'm just going to do the big swings. Well, price came down, it came back. This is the cheapest price you want to sell at. And ideally, you want to look here. Price came down, we came up. We have an area of supply here. Price tested it, it went down, and we have the lows becoming higher. So the sentiment is changing, so we're expecting price to run a little bit deeper into this leg, potentially come all the way up to here, which is a nice area, before having a run low. But we're going to leave this in because we want to also we have this one here, which is nice and fresh and untested. So what I think we're going to actually do is we're going to move our entry to here, because price has already been back to this area here. So this is high risk. The price has not been back here. So we'll put it like that. So I like that a little bit better. There's black space, price pulled back there. So price this is the beginning of the sell zone. And we have it here, and it kind of continues all the way up into the highs of this one here. So sell zone is actually looking like around here. The price has already been back to this level. The highs here. So this is a really nice area to sell just up here. But we're going to leave. I don't know if we should do this properly, or we're going to leave this one here like we did. I'm going to put another one on here above because this is the better one. I think there's probably a better area inside there. Yes, it's right there. Right there. Price has not been back there yet. Nice area. So we're going to put that one on as well. So that is one mini lot. We're going to be selling supply at parent. Sell, we're going to be selling at 42.93, 142.93, and the stop is 43.67. Okay, so yeah, we'll figure out what we're going to do with the stop later. So the target later on, but we'll put it here for the time being. So we have this one, another one. Okay, why wasn't this a good area to buy? I'll let you answer that. You can pause the video for a second and analyze this price, and then you can come back on and we can talk about it. Okay, welcome back. Right, when price left here, where had it been? Where's the deepest pullback since the release from here? Let's draw these in. Okay. Oops, wrong thing. Okay. Initially, we had this one here. Price came to it. Once it's been back there, don't touch it. Price goes up. Where's the next one? We have this one here. Tested. See? Little area here. tested, don't touch it. Again, where's the next one? The next one is just here, so in here somewhere. And when that's done, don't touch it. This is the next one here. And this is the bottom. This is the 10, the better one, like so. It's a little bit messy, so we'll remove that. Turn some light on in here. Now I'm going to draw, you know what, I'm going to remove, it's going to remove, turn these off. Okay, right, let's draw these in. So we had a tiny little one in here. It's been tested. Tested, market flow is moving against, so we're building up pressure against this. First test, second test, you could see we might have lost on that one, but when price does this, you have to move your entries below. So this is the initial entry. Maybe you got stopped out of break even, maybe you took a loss here. When that happens, don't touch it, move it below. Oops. So where's the next one? Well, we have an area here. You can see an area of demand, a continuation pattern, price comes into it. We have a tiny reaction, a 1-to-1 maybe. When that happens, either get out or take your loss, whatever. When that happens, the next one is here. Nice area, it's been tested. This is a pullback. You're not buying at a price any more expensive than here. Price comes to it. When price starts doing this, it's telling you to get out of the trade because price is able to, on the sell side, distribute, on the buy side, accumulate orders to go lower. You can see this is a balance in supply and demand. This means that our area just here is threatened. Okay, once that happens, get out of it. Since then, it brings us down to this area here. This is the big pullback. Price has done that. What do we do now? Do we try and sell, buy this again? No, absolutely not. Move this down. Where's the most recent pullback? Just here. So price pull back here. We'll see what happens when price gets there. Once that one's gone, we have this one here. We have the base. We have price comes down. We accumulate for a while. Price pops up, tests, and then moves away. So this is kind of the lowest area of the curve. This is the 9. So this here is a 10. This here is a 9. 0. And the lower you go, the higher the probabilities. Well, all things considered. But before we do anything else, let's have a look on the big time frame and see what's going on. Wow, I mean, price is moving lower, wouldn't you agree? But you can also see that price is reacting at something down here. So let's have a look on the weekly chart. And you can see that price is reacting to this. This is a monthly continuation pattern. Just here. Price rallied, accumulated, and left. So this is the first time back. So we could sit on this area for a while before we manage to accumulate enough orders to move higher. We have the swaps on our side. So that's fine, and so we can just like sit in this position for a while. If you want to buy here and you want the stops to be longer term, of course, down below this. Once price manages to maybe move up, the next time price comes down to it, you don't want to be in there. You want to be saying, okay, the buy zone starts here. Ideally, you wait for it to come down here. And once it's been tested once, if market flow is moving against it, then you go lower. Where is, let's zoom out. I don't have any more price here, which is a below, so I can't see what's going on. But you can see price left here in a hurry, so there's probably something below here that we can't see. So we probably have an area of, excuse me, demand in here. I can't see anything. See, we have the first test, second test, third test. So this is probably a decent area, the 1850. This is like years away, maybe. So my boys here in the other room. And so again, every time price comes down to an area, if market flow is against it, get out of it on the first test. If it doesn't materialize very quickly, get out of the trade. Cool. Let's have a look at this one. What's going on here? Excuse me. Here we have a buy. So first of all, let's go on the daily chart. Well, actually, we are in a range, as you can see. So on the daily chart, we're in a range between here and go to the 4 hour maybe. Just draw something here. Actually, this is like support. So we have like this area here, which we're kind of bouncing on. So we have this area of supply. And this is the area, this is the support for price. There's no demand here. There's a bit of demand down here, kind of in the lower end of this wick. And there's not so much supply, a bit of supply up here around the starting at the 3 spot, 85.14 area. So fiddling around in the middle here is probably going to get you into trouble. Take this information down with you on the small time frames and look for this. Price went up. Price is starting to form lower highs. The first one that you would consider is this one here. Price kind of came to it. First of all, we had this one here. Pullback. Price tested there. We might have been able to keep our skin on there. The next one is down here. This is like the continuation pattern, which is the one we bought at. Price went up there. We had a small bounce, and then price drifted lower. And so a little bit lower, you can see we have this one here, which is kind of a test, and you have this big mess here. So ideally, you want to be moving lower, looking at the lows here, like the lower the bodies or the wicks. The wick is here. Price came pretty close to it, and it's probably going to keep moving. So if you look at this, this is a mess. The only one that's really clear is this one here, how price came down, left, test, one wick test, and then a strong move away. This tells us that there's interest to buy in this area around here. But keep in mind, this is pretty far above the edge of this area. So if we have a look to the left and see if we can find something. And price moved high, came back, and then we shot up. There's nothing really, there's no demand there. So this is kind of old school support and resistance trading. And so, I mean, price left, it came back here, came back to the lows, tested it. And so, I mean, we have the first test is the only one that's interesting to us. When price comes back down here, we get out of the trade. When price comes back down here, we're going to give this one a shot. We want to see if we're going to get a reaction. We might get a small bounce there. Then after this one, you have, let's say, we have this one here, then we have this one, then we have this one. And this one is a little bit nicer, but simply because this is the edge of the area. But what we also have here is this down here, like so. Like so here, it's been tested once, twice, 3 times, so price could manage to drift all the way down here. We're probably going to get a bounce here, and if you're in front of the chart, we can manage this and get out of the trade. And you'll find that probably 90% of these trades are getting really good reaction. So had I been in here actively managing these trades, we probably would have managed to take profit or get some profit out of about at least 90% of these trades. But we're not doing that here. This is, I mean, simulation. We want to put them in and leave them, and we want to analyze the aftermath and see what's going on. But ideally, I mean, this price structure here, this move, we'll just do it super quickly. Boom, boom, boom. We're moving down. And I mean, this is the origin. This is the origin of this move. And so you want to have a look at here. Is this a parent or is this a child? This is a child, and here's the parent. So ideally, you want to be buying down here, which is good because it's a parent. It's also at the edge of this range-bound market that we just looked at. The high of which is up here, and the low of which is down here. So you could put your order into buy here, and the stop down here maybe a little bit, and hold the trade until it reaches roughly the opposite side of the market, or this one around here. Because price came down, we had a pullback. This is the edge of the area. Sorry, the edge of the area supply, then a push lower. So price could potentially do something like that, come back up around here, around this area here before, doing something else. But that's what we're looking at there. So let's have that's all we have there. We have this one here. I don't know what this euro or US dollar. Let's have a look. That was a short up here. The price didn't really get there, so we got out. Let's have a look at the trades that we currently have on. We have this one. This is the dollar yen, which is a really nice pattern here. Price came close to it. You could debate whether this is a test of this. It's very close. Price managed to move through it, and so the nervous or the cautious trader would maybe have gotten out of the trade, rather not have put the order in, because it has been tested once and market flow is moving against you, which is putting pressure on this area. If that's the case, that's fine. If that is the case, you could either be looking to sell or to buy lower down. And we have something here. Let's have a look at that on the hourly. I don't know if we can get there. Maybe this is it. Yeah, maybe this is it, where we have this little area here. So we have this one. We have this little tiny one here. So we have those on below price. So that's what we have there. We're going to leave it on. It's a really nice pattern. This is a really good exercise in taking these continuation patterns. So we're going to leave this one on. What else do we have? Let's go to the small time from the hourly, apply the template, put this on. Right, this is a weekly demand. Go to the weekly chart. That's why it's really good to put the weekly, the time frame that it was qualified on, and if it's supply or demand. And you can see here that we have a pretty decent continuation pattern here. So the whole logic behind this was something like that, which is exactly where we're going, the 73, 75-ish area, 73, or 73.80. Yeah, so pretty close. And so price is having a bit of a test of that. So we're hoping that price tests that. Maybe move a little bit higher. Let's move this back to the 1-to-1. And then once this is tested, depending on what market flow is doing, if we get a really nice reaction here, well, then we could look to sell higher up. But until that happens, we're going to look to hold here. Also, holding this position will give us some reasonable swaps, and so we could just kind of sit in this for a little while and see what happens. If this area doesn't hold and market flow doesn't change, well, then you don't want to consider anything until the lows here. If we have a look at that on the smaller time frames, this is what we're looking at. Price came back, price left, it pulled back to where? To around here. There's no demand in here, but what we do have below price, we do have this, and so you could kind of do something like that. Take this little area of demand, which is probably a tiny daily area. No, it's the 4-hour area, and this is below this kind of choppy, messy area. But great exercise. This a very clear weekly area. We'll put it on, we'll leave it, and we'll see what happens there. Let's have a look at some of these other trades that we have, these positions that we have. Oops, wrong one. Come on. Right. So let's have a look at, this is 1 hour. So what do we have here? Well, price is moving higher. We have this area of demand here, kind of a continuation pattern. It's probably clear on the 4-hour chart. Yes, and the logic behind this is that price went up, accumulated for 3 periods, then cut away. So I was feeling more inclined to kind of approach the lower bit of this, like around here, because this is kind of a pullback. So if we have a look on the half-an-hour chart, we can probably find something to look at. And you can see here we have a small area, apparent test, and then price moved higher. So this is probably the better area to buy at. This is kind of at the edge of the buy zone. there's no demand below price. We have this. This is a nice demand, but it's been tested. So we're going to leave that in there. Let's see what else we have. We got this one here. Same kind of thing. I mean, price went up, accumulated, went up, tested, pointing to the edge of the area, then moving away. Market flow seems to be moving down. If we manage to move below here and poke into here, parent, child, then move away from there. Keep in mind we have this here, which is like a low. So there's a pullback, there's micro demand in there. So price could go down to the 2350-ish area and have a bit of a bounce from there. But we're going to leave these in there. Let's go up here. We've already talked about that one, the Aussie franc. What's going on here? Well, this is that nice weekly area. See how price, we had this one here, child, parent. So price went through the child into the parent. Now we're having a bit of a reaction there. So we have a look on the smaller time frame here. You can see we're getting some really nice pulls. See how price left the lowest you want to, more expensive you want to pay is the low of the pullback. Price came to it, poked into it. Nice. First of all, we had this one here. Oops. We had this one here. Price came back and we challenged it. So you want to start to look, and where's the lowest pullback? Well, it goes all the way down to there, which is at this demand here. Price comes there, we have a reaction, and so now you want to look lower if you want to start if you want to buy. And here you're going to have to go to the small time frames and have a look. Yes, and here you can see that we have a pullback, a little pullback. So price came down, went up, pulled back and went up. We had tested it. So actually this is the low here. So this is the beginning of the buy zone in this little tiny price nodule just there. So let's have a look at that on a smaller time frame. See if we can see what it is. And there it is. Jumps out of this nice and clear. So we have this one here. So let's put a trade on in there. This is a 15-minute area. We'll put that in. We'll go from the lows to like around maybe here. Boom, owl chart. Can't really see the stop. It's a tiny stop. Right, so let's see. Cool. It's getting pretty close to that area there. We're going to put that in there. We haven't fed into that area yet. I'd prefer if we did, but we haven't. But we do have this. We're going to move down a little bit. Like that, give it some air. We'll put that in there. That's actually, excuse me, a 15-minute area. At weekly demand. It's the pending order, buying at 72.73. 73. The stop is at 72.50. Target is, we'll figure that out afterwards. That was the wrong position size, wasn't it? Yes. Sorry about that. I'll do that over. So put that on. There we are. Good. So now we've got that in there. So what price does when it gets down there. Let's keep in mind, I mean, where are the boxes above or below price? I mean, they're below price. Sorry, above price. So we're in a pretty clear downtrend. Let's go to the daily chart and see what that looks like. Here, price is kind of in a bit of a free fall, and you can see that when we have price pulled back down to here, so when we could go like that, but we also have this area, this little continuation pattern here, and all the way down here we have that. But we're going to leave that on there because we need to engage in this a little bit. It's been tested once, almost. So if price comes down into here, we managed to find some buyers. That might be nice and interesting to come up a little bit. I don't believe that much in this trade because of this. Price has already been down to the lows here. But we'll leave it in there because we we want something to look at. We got this pound Kiwi. Where is it located? That's down here. What's the reasoning behind this? This is a 1 hour demand. You can see it pretty clear there. Let's go to the daily chart. It's below price, and prices pull back to this level. We are reacting pretty close to this, so price went, let's draw these in. So price is doing that, and so this is getting pretty close to the low. Ideally, we shouldn't be buying for a price any more expensive than that, which brings us down into this here. And let's have a quick look at that super quickly in a smaller time frame. See what we have in there. So we have this. Pull back to here. See that little one there? We have that. We've got nothing here. That's the only one. What do you have here? We have demand in here. It's kind of a low. So we could look to buy there. We could look to buy here. This is a better on the 4 or the daily chart. On the 4 hour it's better, but this one is a little bit better. You can see how price went up and came down and went up, so I don't expect price to respect this, so we're gonna clear this off. As a matter of fact, I mean, because of price moving up like this and moving away from this pretty quickly, we're gonna look to sell up in here again. Really nice interest rate swaps on that. Let's go to the 1 hour chart and have a look up there and see what we have. What do you have? That's kind of we have price has already been back to here. We have this one here kind of in the middle. The price has already been back to here, so I think that this one here is probably the better one. Kind of the top of this daily area, so we'll take a stab at that one. Give us a good area away. That's fine. Good. And maybe a little bit less. Come on. Sudden debt, and we'll put the order in. We need lots of orders in there. So this is, before we do this, we need to find out what this is reacting on. Daily chart, month, weekly, and we're reacting on this. And so this is interesting. We spoke about this before. You can see market flow is up on this time frame. And so when you see this, you see we have this. Looking to sell here is not a good idea because price is going to get squeezed. And so what you need to do is you need to focus on opposing supply, which is actually over here. So the better thing to do would be to sell up here. So we're gonna look away from this and we're gonna look at this instead. So let's just mark that off like so. We're probably going to go into the wick of this one. We'll go to the 1 hour. We'll run over there and look. Running very fast. Let's see if we have enough data. There. So here we have it. You can see price came down, wicks pulling back, so we have our entry. The beginning of the sell zone is here. We'll just go like this. Okay, go back here. This one is not interesting. So we have this here. Good. Wow, look at the size of that position with those. Like, it's crazy, this pair. It's a bit of a beast. I'm gonna go straight to the lows there, like that. Still the same. Good enough. It's a wild animal, that one. So this is actually, this is hourly supply at weekly supply. So we're going to sell at 2.0413. 0911 92, about right. We'll go up there like that, 1 to 1. Boom, there we are. Super, very good, very, very good. If price comes down to here, will then be good to buy and move it higher. So we're gonna remove this one here. We're gonna put our order in below price, which look like that. We're gonna have a look at that on the hourly chart. Just to see what it looks like. We want that cutaway. There it is. The cutaway. Here's the cutaway. I like this better. And so we're gonna, let me explain why I like this better. Because I like this better because, I mean, before price came back here, it had already been back down to here. And price came back into here, we popped up and got really messy, so price was accumulating here. And so I just like this pattern a little bit better here. Also our stop goes below this. If we put our entry here, our stop has to go below this. So it's just like below an area of agreed supply and demand. So this is actually a pretty horrible place to trade. This one is a little bit better, so we're going to take this one here. So we'll go out there. Really go to the daily chart. 4 hours so we can actually see it. Let's move that away. Okay, so now I can see that. So this is one mini lot. This is daily demand. $180.15. There we are. Good. Let's put the template on. Let's have a look at some more of these. You have this. The price came down. We pull back to here. Pull back to it again. So if price comes back here, we want to be looking up here if we want to be selling. What about here on this time frame? First of all, we'll go to daily chart, see what's cooking. See we have this nice area here. Oop. See this wick pull back, so we can actually move this a little bit deeper. We'll go like that. I'm going to move this up. Parent, child. So this is lower probability. So because of that, I'm going to look a little bit deeper into this one. So we go to the 1 hour chart. We go over here. You want to find that very clear pull away. Yeah, I mean there's nothing here, is it? What we do have, we have this, which I like. And this, price comes down, accumulates, and then it moves away. We have a pullback, and then price moves away. And price has not been back there. I mean, the lowest is here, which is just above that area. There's nothing really in here that's interesting to us. So we go like that. And that brings us down to this here, which I prefer. So we'll do that. That's a decent one. Let's have a look at this one here. So we have this one here. So what do we think about that? Have a look here. Price is pretty much range bound. Would selling here be a good idea? I mean, look at that. Is that a good idea? No. Why? Because price has already been back to here, and actually to here. So this is the bad one, and this is the better one. But if we have a look on the smaller time frame, well, we might think this is a good idea. I mean, it's not a good area at all, because price pulled back to here. It's been tested once, so price is definitely going to go flying through that in search for liquidity, which is going to be a little bit higher. So we keep moving left. Every time we do that, we'll mark off our highs. So you've got this one here. And every time we find a new one that's deeper, then we move it higher. Okay, and this one here is actually the area that we looked at. So this is the high, the all-time high. Price comes down, we pull back to this area, then it goes down. So we want to be around the highs of this pullback, which we are currently. Not a beautiful area at all. So we want to see a nice pattern. And if you see, we're going to remove this one because this one's no good. We're going to have a close look at that. And if you look at this, this is not a nice area. Can you see? Price went high, came down here, it came down, it went back here. So it's already been back to here. And if you look here, it's actually been back to here. So for this price structure, this is the better area. And this to me doesn't look like supply, it looks like a reaction to supply. If we move that up there, we look left, you can see the supply here. This is actually the supply, this is a reaction to supply. And so the ideal area for this, let me remove some of these lines, would be somewhere up here, because this is where we have that nice drop away. So I'm going to put this like that, above the pullback, above the highs, and below the supply. We go here and we have a look at it. Beautiful. You can see that this is actually the edge of this area. The price has been there once, twice, 3 times. The stop is in the black space. And so if you want to be buying, you want to be buying towards the lows here where price has been back. And this is ultimately the high of this range, which is great. Goodie, let's go to the next one here. I'm going to finish up soon. I've been going for an hour. This is good because price went up and we left. We had a pullback, but the entry is above that, so that's nice. We have this here. Price, this is a little bit tricky. This is also on the daily chart. Let's go to the 4-hour. You can see that look at the pullbacks. So this is it. So here we have the gap, and so for this one I think we're just going to close the gap. Go from the highs down to here, roughly. We'll put it on the daily chart and see what it looks like. Yeah, I like that one a lot better because, I mean, price has already been back down to here for this price structure. And so we can expect it to come at least down to here, and typically price likes to close the gap, so we're going to put it there. 89 Fibonacci number as well. Not that that means anything at all, it's just aesthetically pleasing for some people. There we go. Right, we'll put that buy order in. You can hear my 2 monkeys in the other room beating each other up a little. 34 7744 77.44, and the target will deal with that shortly, like that. So let's have a look. About 100. Yes. Cool. That's what we have. You see, nice release, nice gap up. Prices pull back to here. So we want to be buying for a price at least as low as this pullback. So prices slowly get there. And there's nothing in here, no demand, no demand, no demand, demand. Good, and below that we have this one here, which I like as well. Right here, which price almost got to. So this is after price comes here and has a bounce, then we wait, then we move our entries lower to this one. Once price bounces there, then we start looking here, and so on and so forth. Cool. Let's have a. You know what? I'm going to stop there. This is an hour. This is getting too long. So I'll finish up. We'll continue to move these through. Move through these videos. And if you have any questions, please send them in. Thanks very much.